All right, and welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today, this week. So markets here, wow, 5 days in a row down. And that is the first time we have seen that. I think you got to go back to October. Yeah, October of 2023 last year. But a pretty good bleed here. So last week we talked about kind of this bear flag type pattern with the inside bar and was possibly setting up for a move lower. I did talk about the possibility for a gap up on Monday, assuming that there was no escalation with Iran. It turns out there was an escalation. We gapped up anyway, but it ended up being a sell the news. As you can see here, if we just look back a few days, we gapped higher, rallied for about 30 minutes on Monday, and then really just kind of controlled demolition all week long. So market has just kind of gone down in a straight line, and you got to give the bears credit here. They have pushed, past where I thought we would have gone for for this week anyway. I thought maybe 5K would have been about max downside, perhaps 49.80 with that gap fill, which we just did fill today. But markets are continuing down here, about to hit the 49.50 handle on the SPX. So we're sub 5,000 now for the first time since we just gapped above it back in February. So that big gap there that we had, and it just ended up rallying up into basically April. You can see we're getting close to that 100 moving average as well. I think short-term market's getting a little overdone to the downside. We should get some type of a rip-your-face rally, some type of a short covering rally here soon. But definitely got to give bears a credit here. They've definitely shown up. And again, we talked about that bear base. I said this back 2 Fridays ago. Like this, a lot of people got bullish right here because we bounced. And I said, that's actually not the worst thing for bears here. You don't want to go straight down too quickly because that's how you get the rip your face rally. And, you set up a nice base here and then boom, big drop here. So that's 6 days in a row down for this SPX. We'll see if we get a bounce Monday. I think I was looking at some stats earlier. After 6 consecutive down days, it's a 75% chance of a green day the next day. I'm not sure what it is after that, but either way, pretty good sell here. And some of these high flyers, SMCI down 20% today. Look at this flush here on SMCI, and I guess AI doesn't fix this, but in any case, we filled that gap there. That looks like it wants maybe 650, 655, and honestly, if this bear continues, you don't have any weekly support on this name down back to the prior breakout around the 350s. I'm not saying it would go down there in a straight line, but definitely a good sell. Look at these semiconductors, a lot, high flyers, the AI names, the chip names. Again, this is kind of what happens when you don't build weekly support. When you just go parabolic, you can go down just as quickly. So, and again, Nvidia becoming a $2.3 trillion company. We talked about this all last 6 months. Jason and I talked about this, how ridiculous. For it to gain that much market cap in that short of time, what happens if it ever has a correction, right? It's going to have an equal pull to the downside, and you're seeing that. In fact, Nvidia wasn't even down, that much early on. It was kind of holding on to yesterday's lows, and then towards the middle of the day, it really started to bottom out right around here, around lunchtime, and that's when the SPX really started to roll over. We got a bounce around 12:30, and then we rallied up, and once Nvidia went, the rest of the market went. So again, pretty weak here. Again, I think we could be due for a little bit of a bid, maybe early next week. Maybe we're down Monday. We get a turnaround Tuesday, something like that. But definitely good sell here. And bears definitely showing up here for the first time in a while in a big way this week. The triple Qs here. Look how close. Here's another reason why I think we could bounce here soon. You're going to notice this yellow line here. That is the previous all-time high. So that is going back to November 2021. That's that 408.71. You're also going to see how it kind of coincides with this little chop zone right here. And right here, it's also very telling. That was the last day of the year, 409.52 close. So we would be negative for the year if we break below this. So I think that's where you'd see some buyers probably start to step in on a pierce of that. As a matter of fact, the NQ overnight with the bombing, which turns out it was a little overblown, but the market's down anyway. We had a little V-shape this morning on the NQ. and we're now back below that low here. And the NQ right now, futures are red for the year. The triple Qs are not, but definitely pretty amazing to see that happen that quickly. Here's the ES in case you're wondering. The ES is much off the lows here. So it's right now it's more technology driven as far as the weakness. In fact, you can see the Russell 2000. We can look at the IWM. The IWM is only down, $1.19. It's not a big drop. If we look at the Russell futures, you still have a pretty good tail candle there. So today we're seeing kind of strength in, and even the Dow right now, here's the YM. Dow is actually green. You can see the DIA right now on the corner of my screen. Dow is still green. So maybe a little bit of a flight to safety there, right? The diamond, the Dow, blue chips. So in a sell-off, you're going to see those, flight to safety stocks, the boring names, right? Those are going to get bids, whereas the high flyers tend to sell off. But, again, Russell 2000 is leading a little bit, but it's a technology-driven sell-off. You do have a, possible, let me get rid of this, possible inside bar, though, bear flag on the diamond, too. So down Monday and then sideways. So if this sets up, it can go lower. But the Russell here, again, maybe it could get down to 190 with that 200 MA. But again, even this getting a little overdone here to the downside. So I think short-term, market's probably going to get some type of short covering rally, maybe early next week. But definitely a big showing here for the bears here. And I don't think this is done. I think we will get a bounce. Of course, we'll get a bounce at some point. But I do expect that to result in another lower high. Usually when you get a big leg down like this, it's usually not just a one-off. Usually you're going to get some other type of move here. And I think it's not unreasonable. I talked about this the last couple of weeks. It's not unreasonable to expect us to go back to 4,800. That's not even a 10% correction. And in fact, again, going back to 2022, that was your previous all-time high there. So all it is just back checking to that level. So I think that's certainly on the table. But short term, maybe we're getting a little bit overdone, a little overzealous here, 6 days in a row, basically just straight down. But markets here, bears here definitely showing up. It's definitely a wild week of trading. We also have OPEX this week too. I definitely think a lot of this stuff is OPEX related as well. Notice how we just got reeled into that whole round number near 5,000. We're actually going to close below it. You can make a case too that a lot of call options. The higher the market goes, the more calls that the institutions want to burn out, that is pulling us in there. So we'll see how that trades out next week. But definitely a big showing here for the bears. Lots of geopolitical instability going on. And then you couple that with inflation, which is, on the uptick, and you have a little bit of liquidity coming out. Bank reserves dropping with the TGA right now. In a few weeks, though, Yellen's QRA, that's going to be big. We'll see if she can pull another rabbit out of the hat there. But right now, liquidity coming out, and that is dropping the market here. So that's the bottom line. Let's look at the semis again. So look at this big drop here, down 4.5 or just under 4.5 here on the SMH. We are getting into this gap here around 196.51. You have the 100 MA. I would expect that to get defended. So that's a big level there for the SMH. So pivot high. And then Cohen's ready with this pivot candle with the gap fill and the 100 MA. That should get defended if we get down there Monday. So I would expect that to happen. But either way, pretty good selling ever since we sliced this trend line. I said, guys, careful, semis, lower highs, watch out. And big drop there. We talked about Nvidia. That I think that wants 700. Maybe it gets a bounce here at 750, but definitely coming in. We closed a short today on SMCI here for a nice little gain. But this probably is getting into that 650 handle, possibly 700. Look at stocks like AMD. This has just been pounded here. Broadcom down. ASML reported earnings earlier this week, and this kind of started the chain as well, where they mentioned decreased chip demand, and they said specifically that it was not because of China. So it's just chip demand in general decreasing. That did spook the market a little bit. TSM reporting on Thursday, that stock's gotten hit as well. So it's all great when one sector is taking you up, but when that one sector slips, if nothing else takes up the mantle, then this is what can happen. So that is what I think we're seeing here. Cloud software here also on the weaker side, down 1.5 today. Guys, we're going to close below that pivot. You guys know I've been talking about that pivot every single day, every single week in here. and that is getting closed below. So that is a, I mean, there's already going to be a breakdown on IGV anyway. But I think ultimately this wants to get back to 75. Again, a little overdone here short term. You're going to come into this pivot. 200 MA will probably get some type of a bounce here. Maybe next week, early next week, into the week after, something like that. But pretty good sell there for IGV, and that has been under pressure. I think we talked about, I know I talked about it earlier this week. Yeah, Salesforce announced an acquisition, and that took a hit on Monday, so that kind of kickstarted it. All right, anyway, transports here. This is broken now. So believe it or not, transport's actually green today. So definitely a sector that's showing some strength. But you're going to see here that is a failure now on the weekly. So that green bar, bullish inside bar the whole way, that's now failed. And it's doing it on an uptick in volume too. So I would avoid the transports here, and I would look for lower highs on any sort of retrace. So pretty simple there. But a lot of breakdowns here. All right. Let's take a look at yields. We'll flip over. Let's get to the daily. All right. So again, here's the 2-year, and it's holding up. Again, so nice inside bar pattern, bullish. Again, if this 20 MA catches up to price. Oops, that's terrible drawing. 20 MA catches up to price, you get the idea. If it catches up to price, it can go higher. And if it does, the Fed can't cut. There's your Fed funds rate. If the Fed were to hypothetically cut, say 50 basis points right now, Fed funds would be right about there, which means it would be below the 2-year, which is not good. So with inflation upticking and the 2-year at 5% or just below it, Fed's not cutting. That's also adding fuel to the fire of this sell-off. 5s continuing to uptick. Again, went up into this pivot here, about 4.73. 10-year got to 4.7, backed off. It's still holding up though. And then the 30-year hit my target. I've been telling you guys for a long time, 4.75. It should get there, and we got to 4.8, so overshot by a little bit. Again, yield's still holding up. I think they're a little, maybe a little off sides here, but I think they might be a little stretched here. In the short term, we'll see what kind of pattern they put in. But ultimately, macro, big picture, we're still gonna look for higher lows here in yields. So maybe even back down to this trend line at some point. But yields also, again, another thing adding fuel to the fire. Even XHB, guys, even XHB couldn't figure out how to finish green this week. 1, 2, 3 down into the 20 MA. Again, might get bounced next week. You got some support down here, 97. You got the 20 MA on the weekly. You got the 100 MA on the daily. So it's a little beaten up here, but yields fine. Market finally figuring out that yields aren't just going to go down. And I think that's affecting the home builders here. They were way overbought and overdone to the upside anyway. But XHB coming in. VNQ continued to hemorrhage. I talked about that, warned about that last week with that breakdown, and that continued down. It is getting like a dead cat bounce right now, but it's also just been beaten to hell, so that's not a surprise here. All right, one sector that has been surprisingly strong, and I'll give it to... So here's the best thing for bulls. XLF is green on the week. That's probably your best signal right now for bulls right now. So financials are outperforming. That's never a bad sign. In the last 3 days, XLF has been green versus the spiders, which has been down all week long. So outperformance there. Additionally, take a look at KRE. KRE today is up 2% with a down tape. So we're seeing like arguably the weakest sector in the whole market catch a bid. That's probably your best case for bulls there. KBE also not going to break down on the weekly right now. It's going to save that green bar. So oddly enough, financials are holding up. And again, like I said, that's the biggest point for bulls right here that you can hang your hat on, at least going into the weekend. I also, well, we'll talk about oil in a second. Actually, let's just skip to broker dealers right now. Broker dealers, same kind of thing. It could be a little bear flag setting up, but it is green in a down tape. But here's the other thing. Here's your point for the bulls too. Oil is green. It's only up 27 basis points though. And in fact, you can see overnight it shot up big time. And I said to my members, if this can't stay above 85, we know that this Iran situation's probably not going to really translate all that much. And you can see we're actually trading just barely where we actually got below where we were before the news hit. and now we're just trading just above it. So there's a case to be made. You could say like, hey, today is all OPEX. This is all OPEX stuff, and the fact that oil isn't rallying means that the market's like kind of offsides here. That's a possibility. So just throwing that out there. But oil, it did sell off pretty sharply this week on Wednesday. Thursday got a bounce. Today got a bounce, but now kind of flat. I'm thinking oil might be a little bit. I was originally looking for potentially 90, 92. I'm not so sure we're going to get there now. So now I'm a little bit more neutral on oil here in the near to medium term. But definitely lots of volatility here. Here's a point for oil, though. Looking at XLE today, it's holding up, right? It's green in a down tape. And you're still, as right now, you're above that previous high. And you're above that breakout bar low. So XLE is still holding up okay. I still think it needs to do some backing and filling. It's had a big run, but it is showing relative strength. There's the XOP again, same thing, green today. OIH backing off into the 320 handle and getting a bounce. So it needed to hold there, and it's doing that. So I think these stocks can get a little bit of a bid. They might even lead to the upside. In fact, looking at XLE this morning, just to show you, intraday, look at the bid here. Versus the SPX, which is going down. So again, it's a stronger sector right now, and we definitely need to respect that. Uranium still acting well, but nothing's changed here on the weekly on any of these. Still just holding up just fine. If I can type it in correctly, URNJ, I'm trying to get, there you go. So nothing's changed there. Nat gas continuing to ping pong in this wedge here. If it's going to hold up and push through that wedge high, you got a 190 and then $2. There is a contract roll coming next week, so it's going to be at on June, and it'll be about $2 per BTU. I've noticed that there's been a lot more squeezes intraday on nat gas lately, so some of the bears may be having trouble keeping this down. There is an odd correlation that does happen sometimes when you have a down equity market. Sometimes energy and specifically nat gas gets a bid. I know it's a strange correlation, but there is a lot of shorts in nat gas all the time. And if you get margin selling in, say, you're long Nvidia, and you just got margin called today, you have to sell a winner. And a lot of these institutions are stuck in the same trade, like Nvidia or like an SMCI. And they're also short energy. You see what I'm saying here? You get margin called one area, you got to sell your winners in another area, and that causes this pop. So been seeing these big pops like intraday, right here. We had a brief one earlier this week. It came right back down, and then now it's kind of just trying to fight and put in higher lows. So I think nat gas is interesting here, but either way, that's the wedge that I'm watching there for nat futures. Anyways, let's flip over to the dollar. Dollar's still strong again. And people are asking me about gold, and I don't think gold cares about the dollar right now. And I've told you this before, gold can go up with the dollar and yields. So if there's fear out there and there's a risk off, the dollar will go up and gold will go up. And maybe even yields, depending on the situation. That said, I still think there's a lot of resistance here on the DXY and just this whole zone. So I think it's going to need to do a lot of backing and filling if it wants to get through that. But again, dollar's still strong. The yen is still getting pounded, and we'll see how long it takes for that to come to a head. But dollar's still holding up here. So, anyways, gold. It had a big reversal earlier this week. It may be a local top, but it's still getting a good bid right now. I guess India increasing purchases too, and silver as well. Record imports. I think they just hit an all-time high, if I'm not mistaken. Actually, I can show you right here. Record import on silver, 76 million ounces. So that's pretty crazy there. I don't know. There's a lot of volume. There's a lot of volume in that sell candle. And it's typical to get a retrace. So there may be a local high here in gold, but again, it's still powering up. And like I said last week, everybody was saying like, maybe you could get to 3,000. Like over the last 10 years, everyone was like, oh, it can get to 3,000, maybe in the next 5 years. And it's gone from 2016 to 2450 in 2 months. So we're already halfway there, guys, in a very short period of time. So I might think 3,000 might be too cheap. Again, not saying it goes there in a straight line. We're going to have pullbacks, but China doing a lot of buying, India doing buying too. Silver holding up. It's still struggling with that 28 handle on the weekly. You can see that that's been the case, but it is going to close above that, it looks like. And then obviously your next stop is 30, and then if it gets through that, it can go to 35. Platinum pulled back here. I'm looking to get back into this right around here, perhaps 920. I still think this is very cheap. I did sell a little bit of my swing earlier. I think it was late last week. But I do think it is a buy on dips, and the same thing with palladium. Although palladium's been pretty quiet lately. And then the rock star here, copper, just this doesn't want to stop here. So yeah, you want AI data centers. Guess what it's going to cost, right? And it's going to cost oil and gas too. We take a look at copper here, 445, 450. I think it might want 460. And then I think it's probably going to have to pull back, but it is really powerful here. All right, so lastly, getting onto Bitcoin here. So Bitcoin pulled back as well. It is green today. We have the halving, I think, tomorrow. A lot of people are speculating on it. My thing with the halving is that it's not something that we don't know about. So you could make a case it's priced in. I try not to make too much out of it. I just kind of go off of the charts. Right now, big picture, you did some damage. We broke down. I think we're going to get a lower high. But that said, on the weekly time frame, this is still, I mean, there's nothing really wrong. It can just go sideways to lower here for the next couple of weeks, and then it can go higher again. So I think it's all right here, but I think short term it's in backing and filling mode. All right, anyway, so again, big picture here, good slice, really good sell. Bears showed up way more than I thought they would this week. I mean, I've been bearish. I've been short since we got that sell signal up here. But even I didn't think we were going to go down this quickly, this fast. So short term, we may get a little rip your face rally, short covering rally. Those things do happen. So, I mean, if you are short, you might want to start scaling out or, taking some profits. But yeah, definitely a good slice here. And next week we'll see. We got the 100 MA, we got the 4900 area, whole round number. And then on the Qs, watch that previous all-time high. If we slice into that early next week, I think that's where buyers might step in here and you'd see some shorts start to cover. So anyways, guys, gonna wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. Talk to you guys all next week.